Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund. I hope you guys have your coffee and you're ready to rock and roll. Let's do this. We're going to go over our carry trade. We keep grinding out profits. Location trading, I'll go over what that is again, just to give you an idea. We have our minor locations and our major locations. So let's set that up for the morning so we know what we'll be looking for today and how we're going to trade. Macro picture, big picture, macro, NASDAQ 100, leadership looking to continue to lead. We'll go over that, how we're going to take advantage. And I'll highlight some of our portfolio changes that we've executed yesterday, and things are at the top of the whiteboard that we may execute today. So grab a pen, piece of paper. Those would be stocks to watch that we'll go over. Remember, before we dive in, this is a virtual hedge fund. This means you and I are managing capital. If it were a real hedge fund, you have a tranche of capital. You'd be a trader on the trading desk. In this case, virtual hedge fund, you have your portfolio. I have mine. What we're doing is working together, sharing information. And at the end of the day, you have to be the smart money. They're your decisions. What's your risk tolerance? What's your goal? What's your strategy? Execute that strategy. So I'm going to say a whole bunch of things this morning. Some things might help you. They may apply. Other things don't. You got to figure that out. All right. So first things first, I like to start with the risk monitor. It's green, the big indexes, NASDAQ 100. Let's go there. End of the year, market is in the process of melting up. Looks like the NASDAQ 100, after a 5-month base, is in the process of leading again. It looks like it's breaking out again. I was going over with you guys on the trading desk yesterday. Gosh, I mean, if I had fresh capital, if I had cash in the portfolio, I'd be buying Apple. That's breaking out. I'd be buying Meta. That looks fantastic. I'd be buying Microsoft right on the 200-day moving average. You know, Google doesn't look bad. It's certainly behind. Maybe it's due to start moving higher, and the 200-day is the stop. You know, Netflix has been leading all year. The thing's in the stratosphere. We talked about NVIDIA yesterday. Doesn't have to go up a lot from here, but perhaps what it'll do is base and not be a drag on the NASDAQ 100. And then, of course, there's Tesla, which, you know, has been leading and may continue to lead. That's a high, tight pennant, some type of a cup and handle, what have you. Down a little bit this morning with the ridiculous Delaware. Okay, so what all that means to me, because I'm not going to run out there and buy all those names, and I call them the Hateful Eight, right? So the Magnificent Seven plus Netflix, Hateful Eight. I don't want to go buy all those names, but what that tells me is we're in a very strong year in the stock market. Typically in December, market grinds higher or melts up, depending on what you want to call it or how it behaves, and the leadership lead. Now, I'm very concerned with January, but we're not in the beginning of December, and everything's breaking out and melting. So we'll get to January when we get to the market is climbing an epic wall of. I'm talking about a Chinese wall of, like the Mount Everest of walls of. So whenever you hear that term, the market's a wall of worry, this is it. All the geopolitical risk, all the upheaval in the politics of our own country, all the uncertainty, all the war going on. It's just insane that the market keeps melting up. I'm shocked. I'll be honest with you. I'm shocked. I'm going to keep executing. That's the whole point of algorithm, because the market shocks most people most of the time. And so I need an algo, and we use 10 of them for the risk monitor, to help me put capital to work, because the time to put capital to work is when you don't feel like putting capital to work. I mean, that's just the way the market is. But I'm here to tell you, I'm disturbed at the market action, and like the logical part of my brain just doesn't get it. So that usually means to me, it's a question of liquidity. Liquidity drives markets, and you don't always see the liquidity. You find out later, oh, wow, the Fed was injecting cash into the market for whatever reason. So we know the Fed's cutting rate. They're going to get back to a normal rate. I think part of the confusion and difficulty in this market is the overreach that the Fed had to execute because of the idiocy of COVID lockdown behavior that led to a distortion in economies. And so now the Fed's trying to get back to something neutral and normal, which is juicing the market this year, in a year where you wouldn't really expect it because of all the uncertainty. This is what worries me about 2025. I expect the neutral. They're going to get to neutral, and then, but we worry about that later. Here's a chart that keeps me up at night. I wanted to share with you guys this morning because Citigroup, kind of crystallized my concerns in this chart right here. Okay. S&P positioning is very extended. Now, I'm showing you this not to tell you the market's going down, not to tell you I'm selling anything. I'm not selling anything. I think the market's going up. The market can be overextended and, quote, very overextended for a long period of time. It usually lasts longer than people think and squeezes the living daylights out of the short. And so there's this comment that the short sellers are capitulating that right now. The market keeps hitting record highs, having the best year since 2021. And it's just forcing the shorts out of the market. We're in a everyone's on one side of the boat thing. So I share this with you so you understand that I'm bullish. I'm putting capital to work based on algorithms, and we're making money, and that's great. I'm going to keep dancing while the music is pumping, but my eye is on the chair. I'm going to have a chair to sit on when the music stops. How do I express that in my portfolio? I want to make sure I'm not going down the quality list into crap stocks because they're skyrocketing and let's get a piece of that junk. That never ends well. When the market starts to roll over, they'll be bidless. Those stocks will just crater. There's this feeling sometime in investors, perhaps you're behind the market. Perhaps you're not making as much money as the market. This is a great year. Everyone's talking about it. It's all over CNBC. Oh my God, I haven't made enough. And you start taking ridiculous risk right at the top. Got to fight that feeling. I'll put more money in the Hateful Eight. The leadership, I'll put more money in the leadership, more QLD for me. I'm double the NASDAQ 100. For most of my portfolios, I'm going to have more QLD in the portfolio. For my aggressive portfolio, I bought TQQQ, triple the NASDAQ 100. You say, wow, that's a lot of risk. I'm taking leverage risk, but I'm buying the index. At the end of the day, I have no individual stock risk. I'm not buying companies with no earnings, no revenue, all this other ridiculousness. I'm buying companies that have insane PEs, but I don't care about PE ratios. PE ratios they're ridiculous. They have nothing to do with how to make money in the stock market. I'll go over that some other day. So I'm going to put capital. I'll put more capital in big stock, leadership, institutional support, and I have my eye on the chair. Manage your stops correctly and trust them. Don't make excuses for them. You get positions hitting stops, don't make excuses for them. Well, maybe this, maybe that. I'll hold it for a little bit longer. Boom. Next thing you know, you're sitting with something that's really ugly and no way out. This is not the market for that. November of last year, Risk Monitor goes green for the first time in 4 or 5 months, and you're sitting at a 200-day moving average. That's when you take all your risk. Now, what you want to do if you're taking risk is focus on leadership where all the institutions are driving into the end of the year, marking up their portfolio. That's where we want to go. So let's go over now the part of the portfolio. What did I do yesterday? So I'm going to go over positions we did. We're going to do this every day from now on. What did I do yesterday in the portfolio? What are the top stocks on my white? So stocks to watch, stocks to buy, stocks to sell. That's this part of the segment. This is a segment of the morning meeting. Okay. Let's go over stocks to sell first. I booked a profit in MicroStrategy. That was just a fun thing off the record. Stocks to reduce. We reduced our position in Mara a bit yesterday to make room for buying weakness. I really want to add more in the $20 to $22 range on Mara. And I don't want to be taken out of the stock because my position is too big and it gets right down to 20 and I'm selling it. I don't want to do that. I want to be able to add to it. Okay. So I reduced exposure a little bit. Stocks down 5% again today, around 24 and change, coming right down into that type of range in here. And that's where I'll look to add to the position on the correct location. They also made an acquisition today. So I got to read through that acquisition. It looks like an interesting one as they kind of remake their company a little bit. So weakness on the acquisition, they upsized their convertible debt deal. So they've maxed out the convertible debt deal. And don't forget, when guys are buying the convertible debt, they short the stock to hedge their risk. So you can get some violent reactions. You can't really predict what it's going to be. So if you see some of that reaction sometimes during the day, that's what's going on. Guys are getting allocation on their convertible debt and they're shorting the stock. The stock goes down for a couple of days. So I wanted to have cash earmarked to add to Mara on weakness down to the $22 to $20 area. Oddity. Why do I want to buy Mara 2022? We're location trading here more than ever before. It's always something I've talked about. It's a New Year's resolution. I'm finally executing it. Oddity is a perfect example of why we do it. Okay. We bought Oddity on the 200-day, 50-day moving average right in here. It blew out. While we were doing that, I asked Armor, analysts, the women in our room, to talk to us about this product. Go look at this product. It's in the beauty and health sector. I wanted them to tell me, in their opinion, is this kind of an interesting, fun oddity, pun intended, but not really a game changer in beauty health? Or is this a game changer? And every woman, every Armor analyst who was kind enough to do this, every woman in my life who I bothered with this, my wife, my sister-in-law, my sister, my mom, everybody who looked into this for me, they all come back and say to me, that's really interesting. And they go like that. They have to do more work. I have to do. So I booked a profit on that stuff. When you buy right, when you buy at the right location, when you don't pay up for things, you get to have choice. I chose to book a profit not. We have to buy right, that we're dictating to the market instead of the market dictating to us. Okay. And so that's one reason why I reduced my Mara position. Because let's be honest, buying it up here, if it blew out, that's great. But it had a terrible doji stone day on the half day of Friday. And then yesterday followed through the downside. So, okay, I say I'm not going to carry a full position here if it's going to do some shenanigans. Where I really want to own it is down here. So let's make sure we have some firepower to do it. That was the decision, reducing my position in Maria. I did add TQQQ to aggressive portfolios. I'll be adding some QLD to all my other portfolios today using Armor carry trading techniques. So I'm going to get on a day trade, and if it works, it'll be held for overnight as a bigger position. Let's talk real quick about the Armor Invest portfolio. Albemarle. It's getting close to that time. Nobody's talking about lithium. So it's time to start looking at buying lithium. Okay, lithium stocks have been absolutely annihilated. At one point, they were like the favorite on Wall Street. Everyone loved them. Now, total annihilation. Nobody talks about it. And yet Albemarle is breaking out of that beautiful pattern. Stock closes above 112, and I double my position, and I have a full position on. So I started with a half. I'm looking to double it if it follows through today. On the flip side, I started with a half position in Ford, okay? And it's not giving me a reason to double it. And if it hits that red line, I'm out. So we're going to wait and see. Just executing strategy, guys. Just don't make it harder than it is. Had a great move yesterday in Las Vegas Sands. Bought that last week. It blew out. I'm hoping that's a leading indicator for China in general. So I'm looking for K-Web to take off in here as well. It's still in the buy zone. Las Vegas Sands is out of the buy zone. Let's keep rolling. Let's finish off with three names that I've added to my my off the record portfolio. And this is like a portfolio I kind of have fun with. These positions are never like, large positions. And I generally don't add these positions to portfolios that I'm managing. Okay. So there's a lot of risk in these names. MicroStrategy was on that portfolio and I booked a profit on it. So what I decided was MSOS. Okay. I'm accumulating shares of cannabis stocks down here. I don't know when tax loss selling's over. So don't tell me it goes on all through the month of December. This is just not true. I've seen it last the month of December, tax loss selling, and I've seen it be over in the first week. So that's not a reason not to put money to work. To me, this is just asymmetrical reward to risk. Goes below 4 on MSOS, I'm out. Skyrockets from here, and I'm not paying up for it. So I need to own it in here. So I got to get my allocation. So I nibbled first at MSOS. I have I would say maybe a half a position on, maybe a third. I had about a third of a position on MSOS. And my question is, do I want more MSOS or do I want the real thing? And so let me just remind everybody, MSOS is a swap product. It's a derivative product. Advisor Shares is the manager of the ETF. They literally, at the end of every day, based on their simulation of how many shares of each thing they want to own, their counterparty, and they have a couple different counterparties. Cowen and Company was one of them. I think it still is, and they added a couple others maybe. Their counterparties agree that they have the stock, okay, even though they don't have to have the stock. And a bank is the referee, Bank of New York Mellon, that just basically moves cash from one side of the ledger to the other. That's how you get a value for MSOS. So please remember that if you're buying MSOS, you don't actually own any shares. You own a swap agreement on the share. And that should work okay in a normal trading environment. But cannabis is anything but normal. If a piece of good news hits the tape, out of left field that nobody's looking for, and these things skyrocket, they're going to go lock limit up and no one's going to know what the prices are. And I don't know what MSOS is going to trade at. I imagine I'll make money. It's not going to go down, it'll go up, but I could easily see the swap being closed. The counterparty saying, I'll give you this amount of cash and that's it for that basket. We're done. You can argue they can't do that legally, whatever, man. I mean, I've seen crazier things happen in derivatives and swap. So I don't want all of my money in MSOS. I'm willing to have some, but I have to have something tangible and real on the Canadian stock. Ridiculous. But there's only two stocks I'm going to own. TrueLeaf, and Green Thumb. I only need TrueLeaf and Green Thumb. I don't need anything else. Don't talk to me about all the other names. They don't trade. They're illiquid. It's just insanity on the Canadian Stock Exchange. So just give me the two biggest, best companies. How many times am I going to get a shot at TrueLeaf, which is a cash cow and a dominant player down here in Florida, after the stock drops more than 50%? Because, just saw a story at the tape, nothing. Because of the election didn't go their way. I mean, it's an unbelievable asymmetrical risk to reward down here. So that's how I built out. So I got a third MSOS. Maybe I added another third of the stocks, and I still have room for more. But anyway, that's off the record because I would never tell anybody to go buy stocks on the Canadian Stock Exchange. It's a ridiculous little exchange, and I'm just trying to spread my risk around in a market that in a cannabis market that's very dangerous. So anybody putting money in cannabis, just be clear on what you own. Okay, very dangerous. You almost have to be willing to lose it all. I mean, honestly, I don't know where this is going to go, but the upside is so enormous to me. I got to have some positions down here, and that's what I'm doing. All right, I had a little bit of fun yesterday. Okay, there's Trump media. I don't know what's going on with this thing, but when I see wild trading like this and then it gets real tight, that is a powder keg of trading Donald Trump media. And just for the fun of it, I got some shares in my portfolio. If it breaks out above the gray line here, which is the 200-day moving average, and into this green box, I might increase that position size. Breaks down back below the 200-day, the black and green lines here, the 50 and 200, I'm out. My stop is really up here. This either goes up or I'm out. This is a pure patriotic investment. I shouldn't call it an investment. It's not an investment. Buying Donald Trump media is not an investment. They have no earnings, no revenue. It's a SPAC. We haven't the slightest idea what's going to happen to the company. It goes in my off-the-record portfolio. I'm just having. I like to share with you guys what I do, so I'm totally transparent. And there it is. Two names for the whiteboard that have always been on the Armor whiteboard. These are Armor Power Play names I really like, and they're top of the board. I'm still hunting an opportunity in Uber. I just don't believe this stage 2 base is going to fail. I really don't. So it hits that green box. I'm going to be, adding Uber to my portfolio. And the last thing for today's morning meeting is Pure Storage. Pure Storage announces earnings tonight. I can't help myself. I'm going to have to own some Pure Storage into the number. Now, let's be clear about two things. I usually hate buying stocks in front of the number. This is a company I've been working on for so long, and I think they're in the right space. And the last earnings announcement was a disappointment. So they gapped the stock down on the last earnings announcement. I believe that management was just being cautious. I believe that the business is booming. It's taking longer to close deals because the deals are bigger. The stock went down because they're taking longer to close deals, and Wall Street hates when a management team says that. And they shoot first and ask questions later. When a company says it's taking longer to close deals, Wall Street analysts read that as you can't close deals. Something's wrong with your deal. The market's moving away from your product. Dump the stock. And that's what happened last quarter. Usually that is the correct take. I've been following the stock for a long time. The management has been conservative ever since I followed them. They never get out there and tell you how great. They're always like, this, we're doing this, we're doing this. I'm gonna go with management here, which doesn't mean they can't say tonight, we have big deals in the works, but we haven't closed them yet. And the stock will gap down on that because people don't believe they have big deals in the works. Like, it's either show me or forget it is what Wall Street does. But the guidance that they gave last quarter is conservative. That's why the stock gapped down. So if they could beat the guidance tonight and share anything about the large deals that they're working on, maybe this thing gaps up and we have an island reversal. And so I'm going to have a half of my position on into the number. It craters, I take a loss, and I have to get out. It gaps up, and I can add to my position, average price it, off to the race. That's how I'm handling it. None of what I've shared today is investment advice, right? It's how I run money. You have to figure out if that risk makes sense to you. I can't do that. Nobody can do that. And everybody on this desk and everybody listening to these calls, these morning calls, I assume you're here with me because you want to be the steward of your own asset. I assume you're here with me because you want to get better at managing money on your own. And it starts with taking responsibility for your action. And that works both ways. Don't come complaining to me if the stock gap's down. That can happen. Happens all the time. And if you make money on this stock because you took the risk, applaud yourself. I know it's fun in the Slack room. Hey, great job. You did it. What a great call. That's all true. And I love it. I love hearing the feedback. It feels great. Okay. But at the end of the day, you're the one that had to make the decision to take the risk. Congratulations to you. So that's my thought for the day. Hope you guys find it helpful. Armor Report subscribers, you're on your own. You have any questions, throw it in the comments section. Always happy to answer them. Armor Insiders, 9:30, we'll get the live trading desk started. We have another day yesterday of grinding out a profit location trading. It's a really beautiful day yesterday. One of my favorite when it comes to carry trading, the S&P. So we grinded out profit, and I'll go over that with you guys when the bell rings. We'll go over what our locations are and how we're going to be trading the S&P 500 again today. So we'll get that started at 9:30. Guys, at the end of the day, if you have questions, if you want more guidance, if you want a sounding board, it's your privilege as an Armor Insider, Armor Report subscriber. You guys can always pick up the phone and call me. I'm happy to chat with you. Number is 561-575-6832. Everyone have a wonderful trading session. And remember, be the smart.